Welcome to Own the Chaos. The stock market is crazy and chaotic.
Oh my God, are you seeing this shit, bro? Tesla closed at $695. What the hell is going on?
Brad and Fat Man Zoom are here to help you own it.
Now with IBM getting here, I think it's just going to come more to the forefront, and people are going to get more and more eyeballs on Salesforce. Should see a really nice move.
Taking it to the suits, being relatable and hilarious.
We got D's nuts in the crew. Every crew needs D's nuts. You know what D's nuts' number one holding is? Big C.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. Which area? It's that way. That guy over there is Fat Man Zoom. As you can see, we are actually not exactly where we normally are in the studio. We're still working out some of the kinks there, but we're kicking it back old school. I'm loving it. Last week was kind of a lackluster week, even though the stock market continued to go up. Fat Man Zoom was happy about Clover. What a move that thing had. What are we looking for this week, Fat Man Zoom?
So this week we're talking about Baba. We're talking about earnings, more importantly, and earnings season kicking off. Sort of our reaction to that might be the most important one, some would say.
Yeah.
But first, I want to shout out my starting five. Alan, John Hughes, Oliver Thorpe, Jeff Mahoney, and Sean Dupuis. Thanks for showing up.
Appreciate you guys hanging in there in the first five. So, yeah, Fat Man Zoom, let's get right into it. So, Alibaba got slapped with a $2.8 billion fine, a record. And China's basically saying that they violated some rules and are becoming more and more of a monopoly. It's a wild time to be a Chinese company, and in particular, Baba's obviously been the punching bag here. Jack Ma said some things that I guess that did ruffle some feathers with the Chinese government, and here we are.
Yeah, we are. Hold on, sorry. Apparently we got an echo. Guys, I saw the 27,000. Is the echo still there? One person's good enough. Do you hear an echo?
I don't hear an echo at all. Let me...
Oh, yeah, I hear it.
Okay. So I turned that off. Maybe that'll be good.
Test.
Okay, we're good. I had two audio inputs on at the same time.
Oh,
we're good.
Okay.
We're good. I guess it's better than not having any audio at all, which is usually the case.
Yeah, I mean, listen, what's a Stock Watch Sunday without a technical difficulty at the beginning? Sorry, repeat what you said. I was distracted.
No, I was just saying, it's been crazy with Alibaba and the $2.8 billion fine that they had. The Chinese government's just really cracking down on Baba. I mean, Jack Ma obviously said things that ruffled feathers with the Chinese government. And, the Chinese government basically came out and said they would not have achieved the growth without the sound government regulation and service. Obviously, and no surprise to anybody, right? The Chinese government's taking credit for everything. And so, it seems as if they feel that Jack Ma is more or less taking the credit, which I would imagine rightfully so. And they just took issue with that, basically slapped him with this $2.8 billion fine, and it's been quite insane. I mean, the saga continues, my man.
Yeah, the hits keep on coming for Baba, and it's interesting because before the announcement, I'm in a position right now where I'm thinking about, okay, where does the opportunity lie? Yeah. Because a lot of stocks we've talked about are 52-week highs, which I don't have a problem with, but I also feel like there's other opportunities out there that money's going to start getting. I believe money's going to start shifting to those opportunities, those discounted. And one of those was Baba, yeah. I felt like. And so obviously this gives me a little bit more of a pause as far as what's going to happen in the short term. But I mean, ever since he did speak out of the government, it feels like it's one thing after another. And, I hope things get better. I do feel comfortable with it from a long-term perspective, but I don't know what's got to happen for them not to keep getting crushed. But I'm still going to stay on the sidelines after this news.
Yeah, I mean, and we look at the charts here, and it's pretty scary. You know, once we get down below, and I imagine we do, 215, there's quite a ways for BABA to potentially go all the way down to as low as 170. I mean, to me, I would imagine that investors looking at this, and you as well, would say, you know, when does it stop? When's the bleeding stop? And, you know, I think the more that the Chinese government meddles into this thing, the less confident investors are going to be into something like BABA. And it's not just BABA, right? It's JD, it's all the other ones that are related to the Chinese government that have people on edge. And this is why it's so risky to invest in these, even though they're great companies. Pinduoduo, Tencent, these are all other ones that are at risk now if they fall under the microscope of the Chinese government. It's tough stuff, man.
Yeah, for sure. I wanted to see, the one thing I wanted to look up, and I don't have this number handy. If somebody wants to pull it up, I wanted to see what their cash on hand is. Actually, you know what? I have this right here, balance sheet. Because, I mean, 2.8 billion is a ton of money. But I've got to imagine they've also got a ton of cash as well.
I mean, it's 4% of their sales is what $2.8 billion amounts to. And so it is a drop in the bucket compared to probably what they do have on the books. But it's still that's a record number. It's a huge number. I would imagine that this probably isn't the last time we see the Chinese government crack down on either BABA or someone else.
Yeah. Wow. Is this right? Damn, I got to come back to this because, yeah, I mean, it's definitely a huge hit. But hopefully this thing will create an opportunity. We'll get back moving in the right direction. But, you know, that's sort of the risk you take when you sort of go up to a foreign stock, specifically Chinese stock, just because of the government oversight. You never know.
Absolutely. So there you have it with the news as far as Bob is concerned, guys, and kind of our reservations as far as Chinese companies go in general. But I don't think the story's over, obviously, and I don't think the Chinese government's done working their way into things. The next
and just so you know, Arfin, thanks, Arfin. Alibaba cash on hand for the quarter ending December 31st, 2020 was $73.347 billion.
Yeah, that's crazy.
So just to give perspective, that's the cash they have on hand. And I'm sure they're doing a payment plan.
Right. With interest. So, I mean, that obviously isn't going to necessarily impact them all that much, but investors are still, I think, probably going to be spooked by that. So before we get into the next topic, I just want to invite you guys to hit that subscribe button if you're joining us for the first time. Hit that like as well. We got 157 people in here. Certainly appreciate you guys hanging out with us. And the next topic of discussion is going to be earnings week, and it always starts with the bank. Fat Man Zoom, this is like my favorite time of the year. Obviously comes around 4 times a year, but I love when earnings season comes up because we got so much to talk about. So many things happen. And I think that we could be in store for some of the biggest surprises this quarter because things are really starting to ramp up as far as the reopen's concerned. Banks in general, I think, are going to do really well this earnings season. This week, they've got plenty of them. JP Morgan, Goldman Sachs, Wells Fargo, Morgan Stanley, you know the usuals. They have earnings, and I think this is probably going to set the precedent for the remainder of earnings season. I wanted to kind of get your thoughts on what sector do you think is going to surprise the most?
Tech.
Yeah.
Just from the perspective of, like, I think people are going to be pleasantly surprised by guidance. And this is, to me, going to be the most important earnings of the year. This quarter is going to be the most important quarter because of guidance. And so I think that, you know, you look at stocks like Amazon that's been sideways for 6-9 months, whatever it's been. You see Apple been tough moving, Tesla's been tough moving. These stocks that have ran, and you go into even like more remote plays like Zoom, these stocks that have really benefited off of the stay-at-home, I think that the market has been a little bit cautious with it, and I expect them to give awesome guidance. So I don't, you know, yes, what they report is important, but guidance, I think, is going to be rather bullish, and I think that money's just going to start pouring in once that first sort of like reality hits the market that, hey, these these remote plays are still going to do really well.
Yeah, I mean, there's so many other, so much other cash sitting on the sidelines from institutions and really retail as well, that I think that once we start seeing some surprises out of the tech sector, that people will start to definitely move in. I'm a little bit curious, though, on your thoughts of some of the cyclicals and reopening plays, too, because there's a lot of folks talking about, and I kind of am on the side of the reopening, not necessarily because I think that there's definitely reopening plays that are also tech plays, and I think that they'll outshine the most as far as tech's concerned. But I also think that, when it comes to the discretionaries, people going out and actually spending money in stores, those I think could potentially surprise to the upside as well, as we have seen companies or states rather reopen. And I know that everybody's expecting them to beat, but I think that we could be in for a surprise even more so than what people are expecting. I mean, just look at the way that jobs came in for March. They beat by almost 30% to the upside. So I think that we're in store for some really big surprises just from the reopening side of things. I think across the board it's going to be big, but I think that we're going to see some really big movers out of the industrials, discretionaries, and the banks in general too.
Yeah, I mean, I think as an investor and a trader, what you have to decide, and no one knows the answer. This is anybody's guess.
Yeah.
But what you have to decide is, are these stocks that are at near their 52-week highs, is the push back into people going into the stores, if you believe that, which I believe it as well as you do,
yeah,
is that going to give the boost and give the confidence for them to keep pushing higher highs? I do want to point out, when people are looking at 52-week highs, that one thing they may want to consider that I don't know if a lot of people are talking about is it's not about just getting to pre-COVID highs, because if you think about pre-COVID highs, that was 2019. A lot of those highs came in, right? Like the end of 2019, beginning of 2020, you're talking about over a year ago. So I would understand if somebody would add on the growth that should have happened.
Yeah.
Does that make sense?
Yeah, absolutely.
Like whatever the 52-week high would have been, like let's say a company outperforms and typically averages 20% growth a year. Well, you could say the 52-week high plus 20% could be the opportunity upside, if not more. Now, sectors like when you think about like cruise lines and stuff like that, they're still going to struggle, but companies that did well in e-commerce and just going back into stores are going to. That's the question that you have to ask yourself is, how do you think they're going to fare? And then I want to clarify, not even just tech, but like what we love most, and I want to talk about this more on the channel, not today, but in general, is hybrid stocks. Yeah. I think they're going to be the winners for the years, like hybrid stocks, because the e-commerce growth and the stay-at-home play, like that helped a lot of businesses get better.
Absolutely.
And so coming back, I think these hybrid plays are going to explode, and this is going to set them up for the next couple of years.
Well, there's a lot of companies that I think weren't considered hybrid and then converted to being a hybrid company, right? I mean, Bed Bath & Beyond, for example, they're historically known as a brick and mortar store. You go there, the shop, you don't really buy stuff from them online. And they've really turned things around too, where, a huge chunk of their revenue now comes from e-commerce. And how does that impact the reopening? Does that change, or does that remain sort of the mainstay now? And I think that's probably what we'll see more of. That'll be kind of probably the narrative moving forward, is that there's not going to be a lot of people, just going away from the e-commerce side, because most of them have kind of bought into it now, and why would they want to go back to that? I know so many people, so many friends that have just kind of bought into Instacart, and now they don't even want to go to the grocery store anymore. They just pick out what they want. It's delivered to the house, and that's just how it is. And I think that I think that's probably going to be a running theme. I absolutely agree with that for sure. When you think about what would have happened had there not been a pandemic, and I think we're just now getting to a point on these price levels and valuations to where, kind of like what you were talking about, we're almost getting to a point to where what we could have been had there not been any pandemic. And then you inject a ton of money into the markets, pent up demand. We've talked about how travel could increase in demand threefold from what it was pre-pandemic. And so you just add all that together with all the money on the sidelines, and I think we're just set to go higher.
Yeah. And this week is, obviously it's kicking off earnings season, but to me, the last week in April, when we really have big tech, I believe that makes the world go round. And I think that's going to set the stage for companies like Big C, which I see Jay mentioning Big C, Palantir. People are talking about that. Zoom, right? Like Zoom's just sitting. So I'm really excited. I think this is definitely going to be the most important earnings for this year. And I think it's going to exceed expectations.
Especially for Zoom and some of the stay-at-home plays that people have been leaving behind. You know, when they come out and say, hey, guess what? Nothing slowed down. We're actually continuing to grow. That'll be very interesting to see how investors react to that for sure.
Yeah. I want to ask you something about this week, and it's more selfishly, but we haven't done this before, but I did want to ask you sort of what your strategy this coming week is. And I want to tell you sort of a couple things I'm looking at. I think it would be fun for the people, for our viewers to listen to, because sometimes the top stocks we're not necessarily getting in, we're just watching them. But I wanted to ask, is there anything on your radar this week, not in the top 5, or plays you're planning to make, whether it's getting into a position or actually getting out of a position?
That's a great point. So the strategy that I've taken up to this point, and we have talked about this, I guess, more so in depth with our Chaos Crew folks than really kind of like the channel itself, even though we have mentioned it before, but just taking this barbell approach of having like an even balance of reopening cyclical, industrial, discretionary stocks, some of the unsexy ones that people have kind of forgotten exist, and then also having tech and just having a good balance of that. People lost their mind to a certain extent when I told them that I sold Square. And I even said, just because I sell Square doesn't mean that I don't believe in it and I don't think it can go higher. I want to make sure that I'm protecting myself from a risk standpoint. You know, it was so crazy to watch the shift in the unrealized gains I had with the positions that I have. I mean, Snapchat was on the bottom rung, if you will, in the beginning of the week last week. This week, at the end of the week last week, it was at the top. You know, and everything just kind of shifted. And I think that's probably what we're going to see. We're going to see continued churning, but everything's going to continue to go higher overall. But so having that and protecting yourself and having exposure in just about every area of the market that you can, that makes sense. And obviously good quality companies is really going to be key. Some things that I'm actually keeping an eye on, especially with banks going up. I have Simon Property Group, you know, some of the REIT stocks and stuff like that, I think are probably going to do really well if we see some strong numbers out of the banks, which I think we do.
Yeah, a couple of stocks, and maybe, you know, we'll figure out where to put this, but I think maybe this is something that we keep in here. But I'm looking to move out of J&J from the long-term investment account. I'm slightly green on it, but if you guys haven't heard the news, basically they're drastically scaling back their vaccine deliveries based on, surprise, surprise, Baltimore screwing it up.
I know. I know.
But to me, let me be clear. I have no issues with J&J. It's going to stay in our dividend stock portfolio. But for me, from an investment perspective, you know, I was playing it for this vaccine reopening. I think my money is better used elsewhere. So I'm going to be looking to move out of that pretty early tomorrow. I still should be slightly in the green on that one. One I'm looking to get in, and I'm actually, this was going to be one of my top 5 stocks, and you don't know this, Brad, but I'm pulling it out. Airbnb. Joseph said Airbnb is at its 250 moving average. And he bought a bunch on Friday. I know you like Airbnb. It was on our Stock Watch Sunday last week. I am getting into Airbnb if I can find an opportunity this week, which I feel like I will. But I'll tell you why. I was looking for the top stocks. I was reading an article, and basically they were talking about, just like we thought, travel demand went through the roof, booking flights through the roof, like straight up on a graph. And I started with Hilton. Then I looked at Marriott. Then I was like, well, let me look in like hospitality field. So I looked at Budweiser, I looked at Anheuser-Busch, and I was just like, these things are just off. I feel good about them. I'm not saying you shouldn't be in them, but I wanted a really good opportunity. And I came back to Airbnb. And to me, this is the perfect situation. And this is what we talk about on our channel time and time again. We're looking for discount opportunities. And this is what's happening with Airbnb is, for some reason, I think is it getting lumped in as like kind of like a tech deal? And so I don't like, to me, long-term account in 6 months, I think this thing is going to go through the roof. Price targets are already up there by analysts. And so I'm getting into Airbnb in a long-term account. That's for sure a play for me this week.
I agree, man. We look at stuff like Booking.com and Kayak and all those. They've gone through the roof. People love those, even though they're tech stocks. Yet for some reason, they've kind of lumped Airbnb into some of these high flyers. And I think part of it is because it was trading 35 to 40 times sales, which, it's pretty typical for a tech stock. But when you look at the forward projections of this, that 35, they're going to grow into that rather quickly, and they might even grow into that in the next 3 to 4 months. So, I'm not worried about them trading, a little bit higher than their multiple says. So, and maybe that's what's keeping investors away. I don't know. But when you look at something like Booking, I mean, that's trading a ridiculous amount as far as its valuation is concerned. So I just think that this one's just kind of being ignored. And once we start to see some good, solid numbers, people are going to be running into this thing. We talk about this all the time, getting into stocks like this and not chasing stuff. This is the time to get into something like this if you strongly feel a certain way about it, which we do, because by the time everybody else catches on, it's usually too late. You don't want to be chasing that kind of stuff.
Yeah, their demand. Just wait till earnings. You're going to see it's going to be insane.
It's going to be wild.
So with that said, those are our topics. How many people do we got in the house?
We got 242 of you guys hanging out in here. Thanks so much for being a part of, letting us be a part of your Sunday nights. If you guys wouldn't mind giving us a thumbs up, we certainly would appreciate it, as well as subscribing if you're not already subscribed already. But let's go ahead and get on to our top 5 stocks that we're watching this week. So if you guys are new, every Sunday we come up with 5 stocks that we think are going to be worth watching and potentially making a move on throughout the week, and give our reasons as to why. And Fat Man Zoom, my first one is going to be Goldman Sachs. Goldman Sachs has earnings that come out on Wednesday pre-market, and we've kind of already alluded to this a little bit, and thinking that the banks are going to do extremely well. Goldman Sachs is estimated earnings per share is $9.83, and that's compared to their last quarter of $7.47. $7.47 was an astronomical number. $9.83 is also astronomical, but Fat Man Zoom, I think that they break the $10 mark. And when we look at some of the trading activity that's come from some of these banks, and we like the investment banks more so than the ones that are tied to mortgage and that sort of thing. And the investment banks have been going absolutely insane really for the last 12 months. They've talked about how trading activity on their platforms and their prospective companies have continued to grow. And so we look at this from an investing standpoint. We've already talked about how yields are going to be going up. Not only that, but when we talk about dividends being reinstated, the potential for them to start buying stocks back in June, I think Goldman Sachs, even though it's up a ton, it looks like it's going to break out yet again. It actually has been pulling back over the last couple of weeks because tech has kind of like overshadowed this for the last week and a half. Really since the beginning of April, we saw kind of tech resurge, and some of the banks have taken a back seat to that. But, we look at the chart here, and this actually looks primed for a really nice breakout. It's found a really nice support at 323. And if you're looking to get into some of the banks, and I feel very confident that Goldman Sachs could very well blow these earnings out of the water and have an amazing outlook here. If we break it back up over 340, I think that this is going to be something that we could potentially see all-time highs of by the end of the month.
Yeah, absolutely. What do you have for the, what'd you say it was? You said it break $10. Do you have an estimate?
Yeah, $10.17 is what I have Goldman Sachs coming in at.
Yeah, I mean, I have it even a little bit higher. I have it at 1089. But I agree with you with all you said. And I mean, we love Goldman Sachs. This is in our dividend portfolio. It's been a stud for us. And I know some people don't like how high it's priced, but there's a reason why it's priced so high. So it's a great pick. Next stock, and I want to shout out Sony. Second, I want to shout out Mike Hudson because he actually inspired me to take this stock. It's a great asymmetrical trade opportunity. But that stock is CrowdStrike. And so I'm gonna compel you, hopefully, for why I chose this stock. And it's not necessarily just this week, but more of getting in sooner than later.
Yeah.
If you have an issue, if you're worried about the remote plays, you're worried about business moving forward, and will the demand stay the same? I think CrowdStrike is a conservative play. I think that the most important issue for big business is and will continue to be for the foreseeable future cybersecurity. More and more money is going to pour into security, and CrowdStrike satisfies that need. So for me, whether remote plays stay or not, or remote work stays or not, doesn't matter for CrowdStrike. There's still going to be an overwhelming need for cybersecurity. And we've seen this internationally as well. So I think more and more international companies are going to come into the fold for their portfolio. So I love it. And then there's an outside reason I like it, which is I think they have a profit. I see a path to profitability this year, which we always talk about how huge that is for companies in general, specifically tech companies. Yeah. So I think that if they're profitable this year, this stock is just going to go off to all-time highs. So I like CrowdStrike.
I mean, you know that I've liked CrowdStrike since it was well below $100 a share, and it doesn't. And I haven't shied away from that. Obviously, it's been very choppy, very volatile since it hit its $251 high. But, you know, when you look at something like this, and we've talked about this, about how remote work isn't going anywhere, and there's been a lot of companies that have come out and said, we're keeping our employees at home, or they're allowed to stay at home if they want to. They can come back in if they want to. But that opens up a lot of doors for, cybersecurity issues. And with CrowdStrike, the reason why it's valued this high, I think, is because people really understand and realize that it's coming back down, and it's sitting right at its 50-day moving average and has come down close to its 200-day here and there. It's starting to heat up a little bit more on the RSI. And I think, Fatman Zoom, if we start to see some of the remote workplace such as Adobe, Zoom, and DocuSign, some of the other ones start to really push out some crazy numbers and increase outlooks despite the fact that we're seeing reopenings, CrowdStrike stands to benefit from that too. I think we could see a lot of sympathy plays out of some of tech, continuing their bullish outlook for the rest of the year and probably for the next 5 to 10 years.
Yep.
All right, so for me, my next one is going to be Delta. Now, Delta, they have earnings on Thursday pre-market, and we talked about this, Fatman Zoom. You've been on some flights here and there. They are absolutely packed. And so people are traveling. The demand is absolutely insane. We just saw Disneyland open back up, is opening back up on April 30th of this month. And so I just think that as we start to see things more reopen, obviously the airliners are going to continue to roll here. Their estimated earnings per share on Thursday are $2.83. And the last time I saw an airline that a loss of $2.83. You're right. Sorry. And so the last time I talked about an airline, it was Southwest. And we had mentioned that we love Southwest as kind of our number one. Delta is our number two as far as the airlines are concerned. And I think that Delta could come in here and actually beat earnings. I have them coming in at $2.51, loss of $2.51 per share. And, I'm sure their outlook is going to be phenomenal. I would imagine that they're going to start looking at some things like, ordering more planes. We've talked about Boeing and Spirit Airlines. I think that this all kind of starts to cause a little bit of a chain reaction in the entire industry. I like this play. If we look at the chart here, it still looks like there's a lot of upside here, in my opinion, and there's still going to be some volatility. The airlines still have a lot to go here, but I think, in my opinion, when you look at where it was pre-Rona, it was at $60 a share, give or take. It's still sitting at $50, and if our predictions are right, that demand triples, especially air travel triples during this reopening, then we could see this blast above the pre-pandemic highs. And I think that the upside here is still quite good.
Yeah, I have it coming in at a loss of 249, pretty much the same.
That's pretty close.
The only caveat that I'll add, and we talk about making sure you know the bull and the bear case. The bear case in this is international travel. Demand has been off the charts for domestic travel. International travel is a little bit out of our control, and I don't want to say I'm worried, but I'm interested to see how quickly other countries welcome international travel. And so that's the only thing kind of hampering Delta, but it's one I've been a big fan of. And I think that that once we get through this, I don't even want to say through the summer, but the next couple of months, I think that international demand will be fine. Yeah. So that's the only thing you got to keep an eye on. But as far as traveling overall, we're very bullish on traveling. And it's a great company. Delta's a great company. So I think it's safe to say it's our number two after Southwest.
Yeah, I see some folks saying in the chat that airlines are worth more than they were pre-pandemic, but if you look at the chart, that's just actually not the case. Again, I just wanted to reiterate that Delta was at $60 plus pre-pandemic, and we're sitting at $49. So, we're not even close.
So the number 4 stock, Brad, you don't even know this stock. You don't know the stock I'm about to say. The stock is Palantir. And shout out to you guys early on because I forgot about this. But demo day is on Wednesday, April 14th,
yes,
11 a.m. Eastern time. We already know Palantir is an Aunt Kathy favorite. ARK has been loading up on this. We feel like it's a little bit ridiculous, beaten down stock. And so let me say that I don't expect anything to blow us out on Wednesday that'll make the stock go off. I'd love if that happens. I think it's going to be more of like a neutral thing, but leading up, I think it's worth keeping an eye on, potentially getting an entry in, because I think it will run into Wednesday. So if you're thinking about it, maybe a good opportunity tomorrow for Palantir.
Yeah, I mean, looking at the chart here, you can see obviously it had a really solid bottom around $21 a share, and we had this in our watch list, as a really good bottom as well, and kind of talked about Palantir from a chart perspective. It looked fantastic. Yeah. The stronger support, I think, is actually probably around $23 a share, and it closed on Friday at 24.04. It's still dirt cheap in my opinion. They have a lot of good things going on. They have that security of the government contracts, which they've continued to knock out of the park and make really great deals with them. But we've talked about the commercial side too, their deals with IBM and the like. And so I like this a lot. Watch for Palantir to maybe perhaps move up above 27.25. That's going to be its next real resistance. If we get above that, I think we can start to knock on that $30 door again. But we feel very strongly about Palantir as well. And I totally forgot about that. So yeah, when you said that, I was like, oh yeah, it totally slipped my mind.
What do you think a realistic price target this year would be for Palantir?
I think it depends a lot on what we see from them on the commercial side of things. If they start to continue to gain ground and take up market share commercially, and when I say that, folks, it's not, I'm talking about, not getting away from, but adding on to the government side of things that they have, because what investors are looking for is, them to have a little bit more diversity as far as the revenue streams are concerned and not just totally rely on the government contracts. So I think if they can continue to expand on the commercial side of things, I would foresee Palantir hitting $40 to $45 a share by the end of the year.
Yeah, so the only reason I say that is because this is a great asymmetrical trade, because based on what you're saying is support, let's say $23, that's a 4% downside. And what you just said, let's say you're kind of right. That's 66% upside, but let's say there's just 50% upside, right? That to me is is an incredible long-term asymmetrical trade opportunity for you guys there that are looking into those. Good stuff.
Absolutely. So for me, the last stock I have is going to be right before I invite you guys to join the Chaos Crew. So if you hit the join button next to subscribe, you guys will become part of an amazing community called the Chaos Crew. You get watch lists from Fat Man Zoom and I. Every single day we put out a watch list of 5 stocks that we think are worth taking a look at and considering keeping an eye on before the market opens. We have Discord groups. We share our Webull portfolio that's been doing rather well. It's up 50% since we started back in September, and it's just a great community overall. I think that's really kind of where our true value comes from. The trade alerts, all that good stuff is nice, but really just being a part of the community, and it's $4.99 a month. If you guys click the join button next to subscribe, we'd love to have you guys as a part of the crew. All right, so for me, my stock is going to be Canopy Growth. And Fat Man Zoom, we've talked about this, about the incoming administration as far as Joe Biden's concerned, and how this might impact cannabis. And we talked about how there could be a long road ahead of the cannabis industry, and I still think that there could be, but people were getting excited because they thought that cannabis was going to be legalized. And I think that a lot of people were having a trouble distinguishing between legalization on the federal level and decriminalization. So if you're caught with it, you don't go to jail essentially, and not going to go into jail to the capacity that people are going to now. So that's kind of what people were looking forward to. But now I think we're starting to see a little bit of a shift here. Virginia made history this week by becoming the 16th state in the U.S. to legalize recreational marijuana and the first south of the Mason-Dixon line, which I thought that was interesting. And it didn't even dawn on me that none of the southern states legalize weed, but that was very interesting. Earlier in the week, Chuck Schumer told Politico that he was prepared to move forward with introducing a bill for a first ever Senate vote to legalize marijuana, and not whether he's got Joe Biden's blessing or not. Now, I think that that's going to be something that's going to be hashed out in the Senate, but this is, I think, a huge development for people who are invested in cannabis, people who enjoy cannabis, all that stuff. So this is something that I think is definitely worth keeping an eye on. And I wanted to also say that CGC, in my opinion, is probably the best set up for this because they have the backing of Constellation Brands, which is a huge company. Some of these other ones don't. They don't have that funding that they need to be able to keep things afloat. And we've seen them raise capital by selling shares, and that's never good for the investor. So I still stand by a CGC best in class as far as this industry is concerned. We look at this sitting at $28.99 where it closed out on Friday, and I think that this probably could be the potential bottom for this. I'm not saying that it can't go lower because it certainly can, but with that kind of news and a lot of the optimism surrounded around cannabis, I think CGC could potentially get back up to that $35 to $40 range probably by midsummer.
Yeah, I mean, it's only a matter of time before more and more states legalize it. I mean, you look at gambling, the gaming stocks, you look at cannabis, and who said it here about, Mark D, states want revenue. States need revenue.
Yeah.
States need revenue. And these are great opportunities. And if, the first step was legalizing medical marijuana, the next step is legalizing recreational marijuana, and more that we're going in that direction. I think it's only a matter of time. But it is huge money. It's big money. And so why wouldn't states want to get in on that? So I think that's going to continue to happen.
Absolutely. I mean, we've talked about that from the gaming side of things as well. So, states are doing everything they can to be able to generate revenue from all the losses they incurred over the pandemic. And these are just two kind of no-brainer and easy ways to be able to do that.
Yeah, absolutely. And guys, stick around. It's not over. That is our 5 stocks, but we still have the triple C stock. We still have the top stock under $10. And I've got some rapid questions for Brad. I do want to invite you to check out the free watch list where we give 5 stocks every morning that we're watching for free. Free 99. Go to ownthechaos.com, click on get free watch list, and we'll send it to you every morning at 9 a.m. Eastern time before the market opens. We give you a little bit of a breakdown. But now let's talk about your top stock under $10 and your triple C. Let's start with what's your triple C stock of the week?
It's going to be a tough one, Fat Man Zoom. So if you guys don't know about the Triple C stock of the week, it's the Cheese Call Economy of the Week. Basically, we started this a year ago, and it was just kind of like a joke, and it stuck. Everybody loved it. And so we picked the Cheesecloth Economy Stock of the Week. The criteria is that if you were to go and buy something like this, and the reliability of you holding this is probably that of what it would be if you were to use a cheesecloth condom. That's just how it is. But this is gonna hurt. This one might hurt a little bit, and it goes back to what we were talking about at the beginning of the show. And it's Baba. It's Alibaba. If you're holding this, and if you're holding it for long term, it's one thing. But if you think that you're going to try to catch the bottom of this, trying to catch a falling knife, or you're just going to, look to hold on to it in hopes that it's going to come back, I think that you're going to be in a little bit of a rough ride. The caveat here for me, and the tough part here for me, is the Chinese government. It seems as if they're just so unpredictable, and it's tough for me to want to be able to own any of these Chinese stocks. Obviously, Alibaba is in the limelight here. But man, this is the first time that I've taken a big cap stock like this and put it on this list.
Damn, that does hurt. It hurts my heart a little bit, but it'll be back.
I just think at least for the near future, it's going to be tough going for him.
Top stock under $10.
Top stock under $10.
That's what people want to know.
Top stock under $10. Drive Shack has pulled back, my friend.
Yep.
Drive Shack has pulled back from $3.80 over the last couple of days and is now sitting at $3.40, $3.40 per share. We come down and look at the chart here. If you guys aren't familiar with the company, Drive Shack it's kind of like a Topgolf. It's outdoor recreational driving range that you can also eat at and have fun at, all that good stuff. They have also what sets them apart from Topgolf is what's called their putteries, and Topgolf doesn't have anything like that. They have partnerships with Rory McIlroy. They're really starting to expand nationally. They've been able to raise a lot of capital in order to be able to do that. And this is pulled back. It's pulled back over the last couple of days, especially with tech running. And I think that we kind of just saw Drive Shack take a little bit of a break. Now, there is potential for Drive Shack to actually pull back maybe to around $3.03 or $3 flat. But I think that even if you just nibble a little starter here, if you're not into Drive Shack yet, this could be a really good opportunity. As the summer months get here and as people continue to open up, I think Drive Shack is just going to get a lot more attention. And this is something that we've said for a while now. We see this as a $5 stock. Fat Man Zoom, could 2021 yield a $5 valuation or $5 price target for Drive Shack?
100%.
Yeah, I think so too.
100%. And that's the only stock I would have allowed you to say other than if you didn't say Clover. So I'm going to let you slide on that. But that gets into my rapid fire questions. I just have a couple questions. Does Clover still have legs? The people want to know. By people, I mean Fat Man Zoom.
Clover still has legs, yes. And, it's going to require some patience here. Obviously, they had a really great day last Thursday. You got excited. A lot of other folks got excited. I think that Friday pulling back was healthy for it, especially given the run that it had on Thursday. And so I think that it's not a coincidence, in my opinion, that this came up and technically got rejected at its resistance. So what I'm really watching for on Clover is looking for this to get up over 920. And if it breaks over that 920 range, $9.20 range, I think that we could really start to see this march back towards that $10 price target. I mean, we've talked about Clover being a $20 stock. If everything starts to go right for them again, I think that Clover has every possibility of getting to that $20 price target. And I'm not sure if it does it by the end of this year, but it's very much on the table.
Next question. That was a rapid fire answer.
I know. Sorry. So
Palantir's demo day, April 14th. How do you expect it to react after Wednesday?
I think we see some good reactions out of this, and don't be surprised if we see ARK adding more to it.
Coinbase IPO is also Wednesday.
Yes.
Would you buy?
I would. I would buy a Coinbase IPO, but don't buy it with money that you can't afford to lose. If you're looking to make a good YOLO play, I think Coinbase goes absolutely nuts, to be honest with you.
That's all I got, man. That's it.
This feels interesting, bro. Just like, having this dynamic that we had pre-studio. It's a little interesting. Feels weird being back here.
Yeah, and just so you guys are aware, because we've had essentially 4 of the last 8 live streams have cut out because of the internet, we decided I'd come here and test the internet out, which so far it's so good. And Brad's at home, but we're probably going to do the next couple until we really resolve this issue. Might be something with work that's going on in the city. So hopefully it won't be too long that we have to keep doing this. But yeah, it's like we're getting back to our roots.
I'm just happy we didn't have nothing shut off. We got through a stream. It feels
good not to have that stress.
Yeah, absolutely. That's going to do it for us, guys. Thanks so much for tuning in. We got 300 of you guys hanging in here. So 300 of you spent time with us this Sunday. So we appreciate the time you take away from your families and all that good stuff to be with us. So why don't you go ahead and hit that like button if you guys got value out of tonight's video. We certainly would appreciate it. And subscribe if you're not already. And we are going to go ahead and leave it at that. Fat Man Zoom, anything else from you?
Yeah, guys, we'll see you in the next live stream Tuesday at 3:30 p.m. Eastern time. Who knows? Maybe we'll have a surprise live stream on Wednesday with everything going on.
Yeah, especially
other than that, I'm out.
Coinbase, man. All right, that's going to do it for us, guys. Thanks so much. As always, we'll see y'all before the bell. We out.
Bye, Robert.
See you guys.
Bye.